these revisions happen every single year. This is a chart of the annual revisions to the data. Every year we have revisions, and more often than not, those revisions are negative. The employment data is overstated. So this isn't a new thing. It was just that, again, it was the size, and most importantly, the reason that it was so paid attention to right now is because of A, the president's recent firing of the head of the BLS on the employment data, but B, also because the market is so focused on what's the Fed going to do next. It doesn't matter what the economic report is, whether it's CPI or PPI or the bond auction data or whether it's the employment data. It's like, okay, that's great, but what does that mean for the Fed? And so we go to the CME and we're quickly looking at what are the odds now for a rate cut at the next meeting, because what the markets are thriving on at the moment is more liquidity and more monetary accommodation. And that's what the markets have been trading against and really front running against over the last several months. Whether it's CPI data comes out and says CPI is 2.6%, everybody's like, hogwash, right? And real inflation is this. And have you not been to the grocery store lately? This is what's going on at the grocery store. It's okay to disagree with the data, but what the market's going to trade off of is that data. And whether it's gold prices or whether it's the stock market or whether it's the bond market or whatever it is, the markets are going to look at the data as it's presented. Is it always accurate? No. Are there problems with the data, whether it's employment or inflation? Yes. But it's the data that we have to work with, and it's the data that the market's going to work off of. So personal beliefs need to be set aside about whatever you think about, because those emotional biases lead us to make bad decisions over time. It's like, I don't believe the inflation data, so I'm going to do something else. And then you buy assets that aren't necessarily working in the markets right now. It's important to at least understand the data and how the markets are going to relate to it.
Add to that, the one thing that has changed over the years is that the Federal Reserve used to have much better data available. The market used to give you a lot of information. Mm-hmm. And ever since the financial crisis, the Federal Reserve has stepped in to manage ever more aspects of the yield curve, of the economy. You used to have insight into trouble spots in the financial system. And we are the state where the Fed doesn't even know how large the balance sheets should be so that there's enough liquidity in the system. And so what ends up happening is the debating club at the Fed is reading the tea leaves just like everybody else. They're looking at past data rather than looking at real-time data that the market gives you, because they're just not as meaningful. The Fed needs to have other data sources, real-time data on the economy. The reason why we pay attention to the Fed is because they control the bazooka. They set the benchmark risk-free interest rate, and everything is priced off that. Whether the Fed actually going to cut rate or not, yes, it is important, but the markets have been far more interested on what's going to happen on certain fiscal items.
Catch me daily on The Real Investment Show. The link is in the description.